Hi, our market view presentation will explore two pairs of currency, AUD exchange to the USD and the USD exchange to GBP's tendency. We have four parts to explain: government intervention, rate, interest rate, relative inflation rate, relative growth rate. Now I'm talking about the government intervention. First one is Australia. The statement by Philip Lowe Monetary Policy Decision Report points out that Australian economy will gradually pick up over the coming year, and also the Australian dollar has appreciated over recent months, partly reflecting a lower USD. The high exchange rate is expected to contribute to the subdued price pressure in the economy. The low level of interest rate is continued to support the Australian economy, taking account of the arrival information. The board dragged that holding the standard of monetary policy unchanged at the meeting would be consistent with sustainable growth in the economy and achieving the inflationary target over time. At the same time, the government and the Treasury have agreed the appropriate target for monetary policy in Australia is to achieve an inflation rate at 2 to 3% on average over time. Secondly, the USA. Referring the monetary policy report submitted to the Congress on February, the report pointed out that the Federal Open Market Committee raised the target for the federal funds rate by 1/4 percentage point to range of the 0.5 to 3/4%. At the same time, the committee dragged that it has seen sufficient improvement in the labor market and was reasonably confident that inflation would move back to 2% objective, which would warranty initial increase the federal funds rate. Furthermore, the President of USA proposed wrapping tax reform that substantially lower lifts for the middle class for a corporation. The idea is to reduce and simplify rates, fueling economic growth so that the overall pie is spent rapidly. The extra growth should enable the Treasury to collect far more money than their combination of high rates and salary, compressed fruit and graduated. The last one is England. The Bank of England's Monetary Policy Committee set monetary policy to meet the 2% inflation target, and in the way that helps to sustain growth and employment, and its meeting ending on 13 September, the MPC will maintain bank rate at 2.5%. The committee will anniversary to maintain the stock of sterling non-financial investment grade corporate and purchase financed by the issuance of central bank reserve at £10 billion. The committee will anniversary to maintain the stock by issuance of central bank reserve at £435 billion. Furthermore, March 2017, they discussed the withdrawal of the United Kingdom from the European Union. If it is successful, it will affect the exchange rate of pounds.
Alright, based on the research and report in RBA, Reserve Bank of Australia, in the past 1 year and a half, Reserve Bank of Australia maintains Australia interest rate at 1.5%, and statement by Philip Lowe in RBA shows that the board decided to leave the cash rate unchanged at 1.5% in the short run, aiming to decline the influence of inflation led by growth of economy and then achieve sustainable growth in the economy. According to the ABC News, U.S. Federal Reserve raised interest rate for 3 times in 6 months. The U.S. interest rate has increased from 1% to 1.25% in the short term, and the U.S. Federal Reserve made interest rate increase by Perry is bond holding later this year. As we all know, Trump and his government are aiming to facilitate growth in GDP so that can improve the situation of higher rate of unemployment rate in the USA. According to the monetary policy statement published on 14th September 2017, the Bank of England and Monetary Policy Committee voted by a majority of them to maintain bank rate at 0.25% and stabilize the inflation rate at the rate of 2% in order to a stable economy and preservation of the value of UK dollar. As we all know, the price of British pound has been a significant depreciation after 23rd June 2017, the referendum on European membership. Therefore, the interest rate in Australia is definitely higher than the interest rate in America, which may cause Australian dollar to appreciate against American dollar. Because the interest rate of Australia is higher than the interest rate in America, which may cause an increase in foreign investment in Australia. Though there exists a slight increase in the interest rate of America, thus, a growth in foreign investment in Australia may increase the demand of Australian currency and shift the demand curve to the right so that the value of Australian dollar will appreciate. Since the reason that the higher interest rate in USA reaches 1.25%, the depreciation of UK pound because of United Kingdom European Union membership referendum and so on, US dollars appreciate against UK pound.
On the inflation side, let's see the three charts of each countries. First, the Australian inflation rate fell from 2.1 to 1.9% in Q1 to Q2. It seems like to be average at 2 in 2017. Also in US, the inflation rate fell from 2.7 to 1.9% in Q1 to Q2, and will be average at 2 in 2017 either. But in the UK side, the inflation rate rise from 2.3 to 2.9%. It seems will be average at 2.8 in 2017. From those results, we could see both of the Australian and American inflation rate fall back around 2% and will be similar until to the end of 2017. However, since the government try to control, American may get rise in future. The inflation rate of UK will start to come down in 2017. Therefore, the inflation rate of US may surpass UK in future. As we know, the inflation rate will change the demand for money and the expectation of the bond yield and foreign currency value. It causes domestic price to rise. When the exchange rate unchanged, the export will be losses. Therefore, the exchange rate generally falls if the country inflation rate drops. On the GDP growth rate side, we could see those charts of each country. The growth rate in Australia expanded 1.8% in the second quarter of 2017 over the same quarter of the previous year, and it appears to be stable and future forecasts will rise. The US side has 3% in the second quarter of 2017, but it's likely to fall in the future, even it appears to be rising now. The UK only have 0.3% on quarter in the 3 months to June of 2017. It appears to remain unchanged and slightly down in future. Therefore, when we get high income growth rate, it seems higher income and higher domestic demand, which will increase the inputs. On the other hand, the labor productivity improves soon, so the cost will be reduced to improve the competitive percentages of its product and to increase exports. so the country's currency exchange rate will rise. According to the AUD to the USD exchange rate will be rise, and the GBP vs US dollars exchange will be falling in short run. It's about 3 months to 6 months. However, there are no absolute rules, so the sudden event can also affect the changes, such as natural disasters, wars, and major political events. Thank you for your looking.